Guys, it's Tuesday, October 14th, 5:24 a.m. Central Time. Grain markets are lower this morning. December corn futures down a quarter cent at 410 and a half. November soybeans down 4.5 at 1003 and a quarter. The wheat market is ugly. Fresh life of contract lows and some of this stuff. December Chicago wheat down 3.5 at 493 and a quarter. December Kansas City wheat down 3 and a quarter at 478. December spring wheat down 3/4 of a cent at 550 and 3/4. We've got some more Trump China news to start off this morning.
So yesterday, U.S. Treasury Secretary Scott Bessent confirmed that President Trump and Chinese President Xi Jinping are still expected to meet in South Korea at the end of the month to discuss trade. Concerns had arisen that the meeting might be canceled following a weekend of increased trade tensions. The announcement that the meeting is still on helped the stock market partially recover after Friday's sharp sell-off. According to Bessent, substantial communications between the U.S. and China took place over the weekend. U.S. and Chinese officials plan to hold additional talks this week in Washington during the World Bank and IMF meetings.
China's Commerce Ministry commented overnight. They said that they remained open to talks, but also reiterated that the U.S. cannot seek dialogue while threatening new measures. And Trump, via his Truth Social posts last week or late last week, basically, threatened new measures and then kind of walked it back. So I guess there's still some optimism for a meeting. The soybean market is not optimistic. November soybean futures trading just above $10 per bushel this morning on the board, kind of toward the lower end of the price range that we've seen recently. So despite the fact that there's optimism for a meeting, I think that by the day, optimism regarding Chinese purchases of U.S. soybeans to any extent are becoming decreased every day.
U.S. corn and soybean harvests are probably trailing last year's pace. According to a Reuters poll of 10 analysts, as of Sunday, the U.S. corn harvest was 44% complete, up from 29% last week, but slightly behind last year's 47%. Soybean harvest is projected to be 58% complete compared to 39% last week and 67% a year ago. Estimates showed a wide range, with corn harvest projections between 35 and 55% and soybeans between 52 and 70%. The slower year-over-year harvest pace is due to a delay in crop dry down. The USDA normally releases weekly crop progress updates on Monday, as we all know, but due to the ongoing government shutdown, the reports are currently on hold.
We're left guessing. I have no issue with these numbers. I said yesterday, we're probably half-ish done, and that's where the trade seems to believe that we're at. There is some rain in the forecast for, call it, the central and eastern Corn Belt. If you look at the next 7 days, maybe Illinois, Indiana, Ohio, Missouri catch like an inch up to an inch and a half of rain in total, which is not excessive. It's been a pretty smooth harvest season. Weather, and let's do a little tangent on weather here for a second. We've had a lot of tourists in the comments, as I've called them, Mackenzie, as of late, and they think that the soybean market is down because of Donald Trump and only because of Donald Trump. And the trade war absolutely has something to do with it. But as I told the guys on Breaking Points when I was on a couple days ago, they were asking about China and trade and the markets and everything. And the big take home that I think a lot of people don't understand is that these markets that we deal with, generally speaking, are weather derivatives. When the weather is good, the markets go down. And when the weather is bad, the markets go up. And as it just so happens, the last couple of years, weather has been very good or favorable in the United States and also in South America. So we've just had big crops for a couple of straight years. We're looking at record U.S. corn and soybean yields this year. We had big corn acreage, another huge crop, soybean crop coming in Brazil, a huge crop last year. You want to know why beans are at $10 and not at $12 or $13. It has a lot more to do with weather than it does with the trade war. The trade war absolutely hurts. It doesn't help. And maybe can you quantify that in terms of cents per bushel or dollars per bushel? How much higher would it be if China was buying? That's a great question. I can't quantify that, but just to be very clear, weather has a lot more to do with these markets than anything else. About the government shutdown, very quickly, there is now a 26% chance that the shutdown lasts beyond November 16th. So I don't know when the next time is that we'll see a USDA report. And personally, I know a lot of you guys don't like USDA. I'd like to see a USDA report because I want to see them come up with the lower corn yield number and possibly a lower soybean yield number, because I think that is where we're headed, but we may not find out for a while.
The U.S. dollar rebounded on Monday amid optimism over a potential trade deal with China. The rally was fueled by traders ignoring Trump's latest tariff threat on Chinese imports and focusing on the prospect of positive trade negotiations. The Bloomberg Dollar Spot Index rose 0.2%, while the yen and euro weakened against the dollar. The dollar, along with U.S. stocks, tumbled on Friday after President Trump announced a potential massive increase in tariffs on China. However, weekend comments from Trump and Vice President J.D. Vance signaled openness to future trade talks. Analysts see limited alternatives to U.S. markets, keeping longer-term confidence in the dollar despite short-term bearish bets.
Here's a weekly dollar index chart. And yeah, we've seen a couple of weeks of strength here, but it's been pretty weak overall, down 8.5% year to date. Keep in mind that this version of the dollar index is antiquated. It needs to be updated to include some of our more significant trade partners. But you look at the dollar index, and it's been very weak this year. Has that helped our grain commodity markets or soybean market at all? No, it really hasn't. The pair that matters a little bit more to us as it relates to maybe soybeans in particular would be the US dollar versus our competition, which is the Brazilian real. And the dollar's been weak versus the real also. It did gain sharply last week, up 3.5%. U.S. soybean prices at the Gulf are $1.27 per bushel cheaper than what Brazil can offer right now. Yet China continues to buy from Brazil, as we're going to talk about here in a second. I can't help but wonder what's going on behind closed doors with the government shutdown. Are we doing a lot of export business to non-China destinations? We probably should be, given the pricing dynamics here. And I'll be curious to see what that looks like when the government opens back up, whenever that is.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
Josh Linville has become a regular contributor. He's going to do a fertilizer video with us about once a month. We did fertilizer prices and geopolitics yesterday. This whole thing is super interesting to me because I don't know a ton about the fertilizer markets, but Josh does. And we ran a bunch of charts of the major fertilizers. Josh kind of gave his commentary. The geopolitical ramifications of this whole situation is incredibly interesting. And there's a lot of things that could drive fertilizer prices higher. There's a few things that could drive fertilizer prices sharply lower if they were to happen geopolitically. And I think that understanding how it all functions is extremely important. This was a really cool video, and Josh is great on camera. He's great at explaining this stuff. If you want to see that video, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. Nobody will try to say anything else. Just a ton of info direct from us every single business day. There's a new premium video every single business day. The Standard Grain morning update goes out every single business day at 5 a.m. Central Time, jam-packed full of information. If you guys are working, and I know that you are, if you're in the combine or driving a truck or whatever, everything that we send out is super easily accessible on your phone. The videos are like one click to play. There's no login instructions or anything like that. You just get an email, click play, and it plays, and that's it. So give that deal a shot this morning, guys, but stay safe as always. Don't watch and drive anything at the same time.
U.S. tractor sales rose 4.1% in September, marking the first increase in 13 months. The uptick offers a glimmer of hope for the struggling farm machinery sector, which has been affected by a dip in sales as farmer profitability has declined. Major manufacturers such as John Deere expect 2025 to be a low point for sales, with a gradual recovery expected to begin next year. However, not all equipment categories saw improvement last month. Combine sales were sharply lower, declining by 22%.
This is a report from a group called the Association of Equipment Manufacturers. They had this chart, which is not overly detailed. I wish it had some more detail, but we're still trending very poorly in terms of tractor and combine sales, just slightly above the same month last year, but still way behind the 5-year average. I can't help but wonder, and this is not me being a jerk, this is me just literally wondering who of these major manufacturers, equipment manufacturers, who's lobbying for the government farm payments? Are they lobbying for government farm payments? I would think that they would want to see government farm payments because it's going to help their bottom line significantly. Those government farm payments in question have already been approved based on what I've been told, but we're not going to hear the news until after the shutdown is over.
Chinese soybean imports hit a record high for the 5th consecutive month in September. Imports reached the second highest level on record, rising to 12.9 million metric tons, up 4.8% from August and up 13.2% from last year. Year-to-date imports through September totaled 86.2 million metric tons, up 5.3% from the same period last year. China's steady flow of imports has been supported by increased purchases from Argentina following its recent temporary suspension of export taxes and continued strong buying from Brazil. As we continue to discuss, China has yet to purchase any U.S. Soybeans for current marketing year delivery.
Yeah, so big imports, and that's no surprise. USDA is projecting record Chinese imports, or a tie, I think, with a year, either 2 or 3 years ago, 112 million metric tons. So China accounts for 60% of all global soybean imports, and herein lies our problem. When the biggest buyer disappears, you're left with all these smaller buyers to kind of fill the gap, and they haven't really filled the gap just yet. So you've still got 40% of global, export demand, or call it import demand, that has to go somewhere. And I would think, given the pricing structure that I told you about earlier, that a lot of it comes to the United States. We haven't seen that as much as I would like to see it just yet. It's interesting that Chinese soybean imports and Brazilian soybean exports are estimated to be exactly the same this year. China imports will totally offset Brazilian exports. That doesn't mean that China is going to get every single bushel of soybeans that it uses from Brazil. They're buying some from Argentina. We hope they buy some from the United States. We'll see. The trend in rising Brazilian soybean exports is nothing new. It's been going on for years and years and years, and they're going to hit a record this year while the U.S. soybean export share continues to decline. Part of that, there's a lot of different reasons. Like, so Brazil's become a bigger exporter, but at the same time, we're crushing more beans that we grow here domestically in the United States. And I think that what a lot of farmers would like to see, and what a lot of industry people would like to see, is less reliance on China, more reliance on domestic demand for biofuel and that sort of thing. And we're moving in that direction. It just ain't moving fast enough given the trade war.
Brazilian soybean planting is advancing rapidly. According to well-followed private group Ag Rural, as of last Thursday, 14% of the crop was planted, up from 9% the previous week and 8% at the same time last year. The current planting pace is the third fastest on record for the date. CONAB is projecting this season's crop at 177.7 million metric tons, while the USDA has the crop pegged at 175. Ag Rural also reported that planting of Brazil's first corn crop is 45% complete compared to 41% last year. Excessive moisture in some regions and dry conditions in others are hindering planting progress of that crop.
Got a couple of good maps from our friends at Crop Profit. So over the last 14 days, rainfall with regard to Brazilian soybean country has been below normal by quite a bit, only 53% of normal. And typically they like to see the rain during planting. It gets so dry during the dry season. You need a little bit of rain during planting so that you don't risk replant and emergence failure and that sort of thing. The forecast over the next 14 days calls for a little bit more normal-ish type rainfall, 80% of normal rainfall expected based on Euro model data, which is enough. It's not excessive, and they'd probably like to see a little more in some areas. But from what I've read and from what the weather guys are saying, all is well in Brazil. All the potential for this monster soybean crop remains intact as of right now. What did cattle futures do yesterday?
Cattle futures were higher. Live cattle were 35 cents to 222 higher. Feeders were anywhere from unchanged up to 317 higher. Box beef prices were mixed. Choice was down 166 at 363.91, while select was up 336 at 349.75.
Stock market is off this morning. The Dow Jones is down 340. The S&P is down 73 points. Treasuries are up. U.S. dollar is up. Crude oil is down $1.55 at 57.94. That is not a good sign with regard to our grain markets or any of the soft commodity markets. Have a great day, guys. We'll be back on Wednesday.